The job market has been up, highlighted by a century-low unemployment rate, which sits at 3.5% right now, and that is drastically lower than April 2020, when unemployment hit nearly 15%. 15%. Inflation has also begun to slow. Last week, government numbers showed that consumer pricing only climbed 5% since March 2021. That is the slowest pace in 2 years. But despite all of this promising data, some economists are still worried that the U.S. is headed for a recession. Mark Scribner joins us now live. He's the managing director, partner, and wealth advisor at Carson Wealth. Mark, always good to see you. Thank you so much for stopping by today.
Thanks for having me.
All right, Mark, everything I just said shows us that the economy seems to be stabilizing, maybe even prospering. Why are there still fears of a recession?
Well, it's almost like still a tale of two stories. We have pre-pandemic and post-pandemic, and a lot of the data is confusing. So, the Fed obviously issued a lot of money in the pandemic, but the data is not completely clear at the moment. And since the Fed's increased interest rates so dramatically, I think it's going to take a little bit of time to see, what that does with interest rates and credit card debt. And the consumer at the moment still isn't completely feeling those changes.
What do economists look for exactly when they make these determinations about the R word, about a recession? I mean, as opposed to maybe just a challenging time in the economy or maybe an economic downturn. What really is considered a recession versus an economic downturn?
Well, technically, it's supposed to be 2 consecutive down quarters of gross domestic product. We're still not quite there yet. It's kind of in and out. At the beginning of the year, most economists predicted about a 28% chance of a recession. Now that's kind of crept up towards the 50%, more towards the latter part of this year.
A lot of it is just so confusing to me, but I want to go ahead and ask you about these recent bank failures, because 2023 saw 2 of the biggest banking failures in U.S. history. How much of that could impact the economy, a potential recession, and how have those failures really changed our economy as a whole?
Well, it's interesting, like SVB, they were on watch. I think they had something like 6 violations in 2022. So believe it or not, they were on the radar of the Fed of having some issues and got some negative citations. So it wasn't a complete surprise. They were on it, maybe a little bit slow to react. But the byproduct of that is some of the more regional banks lately have tightened their credit criteria. So that could be a problem because, most of the economy, 2/3 of the economy is small business. So if the regional banks aren't pushing out loans and you can't get a loan as a small business owner, that could cause a ripple effect down the road.
What do you think the health of the banking industry says about our current economy? I know that JP Morgan Chase posted $12.6 billion in profits. That was a 52% jump from the year before. Their shares were up 6% on Friday. What does this signal to you? It's so interesting to me as I see earnings come out, a lot of them being quite strong, yet we're still hearing the R word.
Yeah, I mean, some of the bigger banks in the 2008 had very rigorous stress tests, so they had a lot more scrutiny than, say, something like a Silicon Valley Bank, which is, I think, about $200 billion in deposits. So the bigger banks, the too big to fail, if you will, they are very much watched carefully, so they have different testing that's going on. But I think it kind of made some of the banks a little skittish, definitely if they're going to slow down their lending. That could be an issue down the line. But the banks also have been slow to kind of keep pace with what's happening in the Fed. And a lot of money has been withdrawn from a lot of banks because the interest rates that they're crediting, say, savings account, aren't that great at the moment. So people have been taking enormous amounts of money out of banks and putting into things like treasuries because the yields are much higher than what the banks are able to offer.
But let's big picture this for a moment, because inflation has been on the way down. The Fed has raised interest rates in the past 9 meetings, and we know the next meeting is set for early next month. How much does increasing interest rates impact the economy, maybe a potential recession, and where do you think things head next? What is Jay Powell going to do next?
In the past 60 years, the only soft landing that you probably could point your finger towards would be 1994, where Alan Greenspan was the architect of that. The soft landing, if we do get into a recession, it's very difficult to land that plane. But we only know, unfortunately, till after the fact. It might not be completely visible that we have a mild or a soft landing or even a recession till a few quarters after it actually happens.
How do you think this impacts the job market? You know, the unemployment's been at a historic low, 3.5%, and that is after we saw it at 15% during the pandemic. Again, the world is recovering from a global pandemic. What do you think is going to happen to the labor market here in the United States?
Well, the growth sector, technology companies, for example, have benefited from a low interest rate environment for over a decade. So they were the first ones to start to lay off people because growth started to slow. I do have a lot of business clients that are thought leaders that have, again, pre-pandemic, post-pandemic, have figured out that their footprint from a commercial real estate perspective could be smaller. They could actually hire or put more wages in people's pockets versus a commercial footprint. So the big kind of what if is this work from home thing. We still haven't figured out like if this is going to be a long-term solution where companies pivot towards kind of a remote type of workforce. And we're starting to see, some of that data come out, but we don't know how it's going to end up ultimately.
What do you think needs to happen for the country to avoid a recession? I mean, what does Jay Powell need to do ultimately? Because it's been a really interesting ride. I mean, you've been talking about a soft landing. Will he be able to achieve that? We will not really know until after the fact. Is there anything people can be doing right now in order to prepare, since there's so much economic uncertainty happening right now?
Yeah, I mean, financial planning wise, it should be very much of a key to get rid of, things that are variable rate. So interest rates are high, so people are paying more. We still have inflation in certain areas like healthcare, for example. Groceries, companies' balance sheets look great because they are greed-based and they're benefiting a lot from the rise of prices that are here. But I think in terms of prepare, like you want to make sure that your job's tight, that you have some options that are out there. But if you have variable debt, you want to try to eradicate that as much as possible if it's an extended type of situation.
All right, Mark Scribner from Carson Wealth. Mark, thank you so much for your time, your insight, and as always, it's great to see you, my friend.
It's great to see you. Thank you.